Good morning, everyone, and welcome to the European crossover webinar. And we're seeing a relatively quiet session overall. The dollar is paring back just a bit here. Here's that 96, 92. We had looked from the day before not yesterday, but the day before that for 97.03, and we dipped just below that, but held in this general area. We're just kind of paring back just a bit, but it's a relatively quiet session overall. You're just trying to push it up just a little bit higher. We are looking eventually for a move towards this 1322. I was on face, and we talked about this as a target area, this 1323, which is confluence with the 1322 of this entire range back of 1176 to 1569. And 1327 is a 61% back from 1176 to this last recent run up here. Cable's a little bit higher on the move. We'll get to some of the news, but we've stretched on both sides of the confines. You can see here at the 78%. And we did make that move. I was talking yesterday about the area between 31.28 and 31.40 when I was on face of 31.40ish. I said 31.28 to 40ish, and we did make it up there to 47, and then we turn around and dip right back down, and we're reasserting ourselves, come back in this area. We'll see, we'll take a look at where we stand, but quite the movement. Dollar CAD has finally eased back here toward his 33.54. We had 33.58. The one thing is that it's going to keep that pressure a little bit on there. Obviously, the dollar's weakening, and then of course, crude. When I was on face, I did mention that I'm looking potentially for a move to 57.98 here on the crude because we've held up so well. You remember all last week we had 56.48. There you go, right there as our resistance, and you can see how that kept the market pretty much in check for the most part of the week before we put this hammer, and then things have turned around. Now 56.48 is now our support area, and I think there's a chance that we can go and scoot this up and potentially get up to 57.98. Certainly that's keeping the pressure here on the dollar CAD, which on a long-term basis, I think we'll resolve ourselves higher, but this is a pretty key area, but we may have to dip a little bit lower. I'm liking this area here on a very short-term basis in the low 30s, but we can dip a little bit lower if crude makes that run up here. Eventually, I think we'll come higher, but for those holding longer term, yeah, I think we'll resolve ourselves, but finally getting some pressure to push a little bit lower into the dollar CAD. Wow, look at gold. How do you like that? We had 1304 as our resistance area, and we've been able to even now get beyond that and push even higher here with the gold. So we'll get a better feel on that. I think we had talked previously, we had 1304, remember, in our Asian analysis. Potentially, we're looking for a move up to 1314 because that would also coincide, if I remember correctly, we could take a look at the Asian analysis from over this weekend, but that would coincide with a 50% pullback. So look here. You see right there? And look at this nice solid area coming across here. So 13, so potentially moved up to 1314 as a target area here. Aussie yen didn't quite make it up here to the 79.02. I kind of like that area for a nice little good short here. Thinking the S&Ps might drag it a little bit higher, but it hasn't, and we've since pared back a bit, more than a bit actually. I think it's just gently worked lower here. I was hoping we'd get up here. I thought this is going to be a great area here, but we're just hanging around. And Aussie is paired back a little bit. Remember, our resistance was, if you remember on our bias chart, when I covered this, for the last 2 days, it's been 70.91 here. I thought that's about as good as it was going to get. And the high was 70.92. So not bad. Peso continues to pair back a bit, but we were looking for those who were scalping, we're looking for a move back down to, well, not back down to, but I'm saying a move if you were a scalper when we were covering this yesterday on face, down to 1925 to clean out the stops and get a good rebound. Well, we did get a good rebound, and this is where I thought we'd run out of gas right here on a short-term basis. We did back. Now we've reasserted ourselves, come up here to this 1935-ish and pairing back a little bit. I think the oil certainly has its own impact on there, and I think the market may just need to do a little bit of filling back and filling in here before we can make an eventual move higher. And the cable still strengthening here. Looking here at the economic calendar, we did get Spanish inflation just a little bit ago, and well, not a little bit ago, but coming up at the top of the hour is going to be Eurozone industrial production. And then as we come into states, we do have some key numbers. We have durable goods at 8:30 Eastern, as well as PPI demand. We had CPI yesterday. EI oil stocks is going to be at 10:30 a.m. Eastern. So durable goods and PPI coming at 8:30 Eastern. That may allow us to get us a move here. Maybe we'll make this move here a little bit higher here in the euro. With that, we're just going to move into the news. Like I said, it's a relatively quiet session overall. So let's go and move into the news here. Another day, another humiliating defeat for Theresa May's government on Brexit. Boy, Amanda sure was right on that. Today, Parliament turns to a vote on what is often described as taking no deal off the table. But it's not quite as simple as that. The notion, due to debate, is merely about excluding a no-deal exit on March 29th, but still notes that a no-deal Brexit remains a default position unless a deal is ultimately reached in this. May is factually correct in saying that the no deal can only be averted for good by agreeing to a deal or revoking Article 50 altogether, with the latter not a realistic option under this government at least. Thus, today's vote only makes sense in terms of subsequent vote currently scheduled for Thursday calling for delay on Brexit and the EU's response to that request. EU capitals will make up their mind on that summit next week. In the meantime, they have made it clear that they want to see that the UK has a plan about how it can use the extra time. Agreeing a short delay only to see the no deal reemerge as the outcome a few weeks later would be pointless. The EU would likely give more time to the UK to hold a second referendum, but there's no majority in Parliament for that outcome, at least for now. More viable at the moment would be a sign that May now realizes that the only way out of the impasse is a cross-party consensus. Towards that would be inevitably a softer Brexit. A day after the European Commission outlined a more guarded stance on economic ties with China, Italy has come out with a staunch defense of its MOU for Beijing's Belt and Road project. Prime Minister Giuseppe Conte insists Italy will protect vital infrastructure such as telecoms and avoid transferring they know as part of the agreement. On to the markets. The interminable Brexit process drags on for another day with the impasse and uncertainty for the world's fifth largest economy and its European trading partners infecting major world markets, its margins, as well as selling the pound on daily roller coasters. The heavy 149 vote for the UK PMA's second attempt to push for the Brexit deal through Parliament now leads to another parliamentary vote later on Wednesday. The UK should leave the European Union on March 29th without a deal. With May saying lawmakers would be free to vote on that without having to toe party lines, it's expected there is a majority to rule out the no deal. Although the wording on rules that only for leaving the day expected to meet mid-May, just before European parliamentary elections, though still requiring unanimous agreement of all 27 EU members at next week's summit. The pound climbed above 131 early in the day, about half a cent, where it was shortly after the vote on late Tuesday, but more than a cent below the highs on early Tuesday before the UK Attorney General's office on legality of the latest EU assurances indicated many lawmakers will still not back the deal. Sifting through the reams of the investment bank analysis and scenario building overnight, there are a myriad of permutations and combinations of next steps being discussed, ranging from a variety of Brexit delays to a leadership challenge of May, a snap election, second referendum, even cross-party talks with the third vote in Parliament. Overnight, Wall Street stocks, weighed down partly by Boeing's share drop on the fallout from the Ethiopian Airlines crash, ended marginally on the black, and futures were flat for the first thing Wednesday. European stocks were down 0.5% after the major Asian bourses closed mostly in the red. U.S. Representative Robert Litziger said he hoped the Sino-U.S. trade talks would be in the final stretch, but reminded markets that there's no deal could be an option, sending mainland stocks down 1%, with heavyweights Hong Kong and South Korea down 0.5% down. 10-year U.S. Treasury yields firm to touch after 2-month lows after the U.S. inflation news on Tuesday. Moving on, Canadian dollar rises to a 1-week high as U.S. inflation slows. Canadian dollar strengthened to a 1-week high. If the loonie seems to have reacted to the softer reading on the U.S. CPI, said Mazen Issa, a senior FX strategy, particularly the high yielders have been better performers following the report. The dollar index fell against a basket of currencies after the data showed the smallest annual gain for U.S. consumer prices in nearly 2.5 years. The price of oil, one of Canada's major exports, was supported by signs of tightening global supply after the Saudi officials said the kingdom planned to cut the oil exports in April while the government reduced its forecast for domestic growth output. Aussie whacked lower again on economy concerns. The Aussie dollar skidded lower on Wednesday after a local consumer confidence gauge triggered fresh concerns on about a slowing economy. The sterling was the other big mover in currency markets. The Aussie dollar has been sensitive to signs of a loss of economic momentum, particularly after the Reserve Bank of Australia upbeat outlook last week failed to dispel bets it would have to lower rates eventually. Yields have to come off. Stock markets are in the red, and in FX land, the dollar and Japanese yen are outperforming at the expense of the Aussie and the Kiwi, particularly after softer domestic data, said Sue Trin, analyst at RBC Capital Markets. Trim said the weak March consumer confidence data in Australia highlighted continued weakness in consumer spending. And on to the pound, edges up after May's Brexit defeat. The British Parliament on Tuesday rejected May's deal to quit the European Union for a second time. The Parliament is likely to reject the no-deal Brexit plan, and the March 29th exit date subsequently being extended now looks to be a distinct possibility. The pound is just stabilizing on such expectations for now, said Takuya Kanda. Even if Britain decides to extend the Brexit deadline, the question will shift quickly to the length of the extension if it desires and what it plans to accomplish, said Ayako Seda, a senior market analyst with Sumitomo. Without an acceptable plan, Britain might have a difficult time convincing European leaders and EU summit next week, forcing market participants to reverse positions on the pound and again exposing the currency to sudden downturns. And just a quick move on yields. U.S. Treasury yields tumbled on Tuesday, pressured by weak inflation for the world's largest economy, supporting expectations the Federal Reserve will hold interest rates steady next year. There's probably some spillover from what's going on in Britain, specifically Brexit, because the headlines coming out of there have been profoundly discouraging, said Tom Simmons, money market analyst with senior economist at Jefferies. In the United States, the Labor Department said its consumer price index rose 0.2 in February on higher costs of goods and gasoline rents. Excluding the volatile food and energy, the CPI edged up just 0.1, the smallest increase since August of 2018. John Herman, rates strategist at MUFG Securities, said his bank's models is suggesting that the Fed will hold rates through the summer this year, followed by a shift to an easy monetary policy stance in the September policy meeting. So with that, let's go on and move into the analysis. Look, the markets are just quiet. There's probably not a whole lot of that we're going to be seeing as far as of changes in our analysis. Looking here, we have 1312 here as the resistance. Well, we're going to adjust that a bit because we kept this upside bias here in the euro, and right here we're looking for, even going to move this here, right, coming in right there. You see here? That's what we're looking for, 1327. So we're going to move this higher. 1327 seems a bit off when you consider how tight the range is in here, but we're looking for 1327 here on the euro. If the dollar would also find itself, you can almost call for 1264, but that's only 30 pips away. And if you break here, that'd probably fall further. So we'll move this up to 1253 for the support. Obviously, getting past this 1294 would be huge right here. If we can do that, you can probably even push even further, and the upper challenges would be up there around 1340-ish on a daily close. All right, there, 1340. But that initial target we'd be looking at is 1327. Moving on to the cable. Well, this is all over the place. On a short-term basis, you look at the closing here, 31.79. Well, it's going to be resistance on a daily close. We've been up and down, and the headlines are still relatively negative. To me, I think this would be a very key area here, right there, 31.79. We're not that far away from it, but I think you try and make this push up here. I would think folks are going to say, fool me once, shame on you, fool me twice, shame on me. So I don't think they'll be buying this move up in here. So I think it would have a tough time, but we'll see. But 31.79 on the daily close, we're going to put that in there. And here's the key level back here, that 31. There's that 31.94 we kept thinking about. So it's going to be 31.94 right there. 31.94 is going to be our resistance right here, with 79 being key on a close. That's going to be support right there. 30.73. 30.73. Moving on to the Aussie dollar. Well, this we've had this in place for Monday and Tuesday, and here we are today, and this took it out by 1 pip. And I wasn't expecting much. I mentioned that in the face webinar. Nor much on the downside. We'll move into the Aussie on the intraday. And we were looking for 70.25. I'm going to keep that here. So really no changes in the Aussie. And like I said, it's going to be relatively quiet. I mean, we're in a relatively quiet session with the exception of the cable moving about. Everything else is relatively quiet. Boy, this Swissy is really holding up very, very well. Look how we've been challenging that 12. Remember, that's that key weekly area that we've had, and I don't even know if I even had 12 in here. I don't think we had that high. No, we had 103. Okay, but that 12, look at that, it's been holding up. If you look at it, we have it on a weekly. See that right there? We've had that in place, I think, since Friday, and that's where they ran out of gas. Be huge if they could close the week above that. So move this back again, just a little bit higher, but at 112. Now we're finally starting to pair back here. And we were looking for par 48 here. We're not that far away from it. We're gonna stay with the par 48. And I'd move this up to 12, but I guess that's a little bit of a stretch here because you can see here we did make it up in there, but look how we're holding here fairly tight. We had it at 0103. Let's just go and move that back to where we had it before. I don't know why I moved it. Looking at the daily threw me off a bit. So keeping that where it was just yesterday, 0103. We're going to keep the par 48. Well, here's the dollar CAD. This thing was holding up so well. The only thing that's extending that move lower is right here where we are with crude oil. But we're finally made it down here at 33.54-ish. We had 33.58. Remember, that was our support that we're looking for the market to get to yesterday, potentially. And this is a very good area here, this 33.54. The only thing is, and with crude continuing to move lower, I think this is a good gathering here, right here, where you'll see people say, you know what, I'm gonna start, I don't want to say backing up the truck, but start putting a little bit of a few positions on. But with crude pushing a little bit higher here, I'm looking for potentially this could get to 57.98. Then that's going to put a little bit of a downside, and you might even get a scoot in here. Look at this 33.04. Wow, you know what? I'm not that might. Well, I'm saying it's a little tough call here. Back in here. Potentially, we could come down here, this 33.14. You know how big of an area that was before. The only thing is, and I think the dollar CAD can resolve itself to the upper side of, in time. But obviously, if crude does get its sea legs going even higher, that's going to put that pressure. And for those people that came in, let's say a little bit late, and the way the market hung around here, heck, I was selling at 34.56 last Friday, and I thought we were going to, as I mentioned on the Facebook, I thought we were going to drop down to 34.03 lickety split. And boy, it was just hanging on. I'm like, well, forget this. I think I remember I took off half for like, I don't know, for 15 lower or something, the other half like 20 lower, because and still didn't want to move down. Well, now with crude holding up, it's giving that little extra pressure. I think there's good demand coming in this area right here, 33.54.58. But if crude breaks higher, continues to move higher, we'll probably come down here at 33.14. You may even push a little bit lower. So at least for today, we're just going to go right there with 33.34 coming across here. I'll show this to you. But it's all going to be up with crude. No. We'll call it 33.34. And it's just because crude, look at that. That's going to keep a little bit of extra pressure. Plus the dollar's edging back a bit anyway. I think this is a very good area though overall, but we'll probably see a little bit of extra pressure. On the upside, $33.92. $33.92. Moving into the dollar mex. Well, we saw a pretty good dip down here, this 1930. We talked about this being a good value area because of the volume. And, it was on the face webinar. I said, for those that are scalping, I think it's a very good area here. But if you're scalping, let's see if we can get a dip just below 25, clean out some stops. And then we'll see a pretty good low bounce off of that. And that's exactly what happened. And we saw a pretty good run up here to 30. Then we barely pulled back a little bit. This is the area that I thought we'd run out of gas right there. 34.46, and you can see this exactly right where it went to. You see that? And then we dip back, but it reasserted ourselves. I thought we might pull back a little bit further, and then now we're running out of gas right here at 36. I'm gonna use this one. We'll see what happens, but I like this area right there for the resistance. 36.20, 36.27. We may have to just do a little bit of extra work there for a while. Support. Yeah, right there. 192666. Tighten it up a bit. Going into crude. Look at this thing, it's still pushing up higher. It doesn't look like it wants to. This market feels as if it wants to resolve itself higher. And what I mean by that is it's not going to be satisfied until we can push higher. Now, what happens after we push higher? That I don't know. I came up with this 57.98. Right there coming across. You see that here? Look, this is where I came up with this. It actually could be even a little bit higher. I put 57.98, but there you go. Maybe we do take out 58 cents. You see how we got this close here, okay? And then you try and take it out and it can't get beyond here, okay? Well, let me make it easier here. So right here, you see that? So this is where it closes here. And then look where they come back for support. So that's actually 58.17, but I had put 57.98. See how we're still moving higher. So maybe they do make it up to 58.17, but I'll stick with my 57.98. But then we're looking on a daily here. Let's go move on to the 2 hour. Well, we have EIO stocks today. Well, once again, technically speaking, the way this market is, and it's, remember how last week we had 56.48 and this keeping this market in check for the most part. Yeah, it was getting above, but look how we weren't able to close here. We did close above it, but then we quickly faded, and look how this close was just below the 56.48. Then we rotated lower, came back, made another run, but we failed ultimately. This market is not, it technically speaking, doesn't feel like it's going to be happy until it resolves itself higher. And then it's the upside. So we're going to go with, we'll keep the 57.98. And support stays the same, 56.48. Moving into the dollar yen. Here's that 11.44. I guess I haven't updated enough because I used to keep all the 2 hours right there. There's that 11.44 that I was looking at short the other day, a couple of days ago, and I ended up pulling that offer, and then we dipped. We didn't dip a whole lot, but we did dip. Look, the spoos are holding up well, so we're looking for a move potentially up here to 11.68. Right there. And let me keep things in check. I'm not sure how much this thing further is going to stretch. If we do take out 44, they're not going to be happy with just 50 or 60. So we're going to go with 1169 here on a stretch. If somehow the S&P is below doors, just so no one's caught with their pants down. The support right here is going to be 1109 on the short haul. Moving into the Aussie yen. This is really tight in a really tight range. I'm surprised in light of where we are in the SPOOs, they weren't able to push it up a little bit higher, but obviously we had concerns here with the Aussie. So we're still going to go with 79.02 just on an upside stretch because I think if you hit some stops, I mean, it's not even that much higher. So I'm not, we came pretty close. It was only 10 pips away. But I thought, well, why jump into this thing? Let it go where it wants to go. Obviously, it didn't go. So then we saw a pretty good little pullbacks. That was a bit frustrating, but it was quiet though, nonetheless. So we'll still stick with the 79.02. That's confluent to 61%. Look, that's only 10 pips higher. So if you take out the stops, we'll probably push them all the way up to this trend line. If it does eventually go up there. Matter of fact, we're just going to go with 79.09 because I don't think they're going to be happy if they do take this out. And now it's questionable. I don't think they're going to be happy with 10 pips higher. So we'll go with 79.10. It's a bit of a stretch, though. Let's put it this way. I wouldn't be interested in selling this thing unless we got up there. I don't like the way it's just hanging around here. Obviously, if we turn down in equities, we can really push lower. Support, we had 78.29, and the low is what, 78.37. We'll keep the 78.29, so obviously no changes there. Let's move into the cash dollar index. Well, this is our upside stretch for yesterday, and we're pushing a little bit lower here. Look, the dollar index can stretch a little bit lower, and I don't know if it would make it down here to 62. People are getting a little bit concerned if it does make it down to 62. Let's just keep it simple and go with 96.74. Actually, just a hair lower. There we go, 73. For right now, we'll keep it pretty tight, 97.17. Maybe a little bit too tight, but maybe just a little bit lower. May get this thing to move around with CPI. Gold, boy. Well, see, there's that upside stretch up in here. I actually had it marked on the daily, not on the 2 hours. And that's what we're looking for, 1314. This is actually, as I showed you, is 50% back. See right there? That's 50% back. And also confluences with a nice level here. We had that in our Asian analysis to start the week, and I think we'll eventually make it up to 1314. So let's move this here, 1314. We did get past this 04. That was on a short-term basis, but seeing a nice recovery here in gold. It couldn't make it down to the 38%. Support is going to be right there. Call it 1297. Actually, we move it up a little bit higher. It's going to be right there. Unless this market gets turned, let's call it 1298 right there. But the move to 1314 makes sense. Moving into the bund. This bund is really all over the place. So we had 66.76 and we pushed up and even got above the 67. We're coming back here. Resistance 66.98 right now. 66.98 on the resistance. We'll draw this out. With support coming in right there. They'll follow up at 66.51. Right there. Moving on to the DAX. Well, we had 11.6. Let me go back here. There we go. We had 11.649 and we rotated lower from there. And we just went with the levels in here. The resistance is going to come in right there, 11.587. with support right in here. We're just going to go with the technicals. This wasn't bad. I mean, we had support as 485 and the low is what? 473. But we're just going to move just to go with the technical level right here, which is right there. 11,450. And there we go. And gold's still pushing a little bit higher. There's a little bit of resistance right there. You see right there, 1309. So you may see a little bit of a pause at 1309, but I think eventually it wants to resolve itself up to 1314. Still think we make this move up here to this 1327, but remember, you could push a little bit higher, but the key daily would be, the closing would be 1340. Obviously not a whole lot of movement. Quicker crossover, European crossover webinar. Good luck trading. I'll get this posted in the room. And have a good day trading.